Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 12 hours, the Australian dollar has remained on the back foot. Having challenged the 60-day moving average, the market is still very wary of where the bears may be lurking. That is around 70.20 to around 70.60.65, this area here. The reason why I'm picking this area is if we look back here in June, the candle was very heavy from the rejection from 70.60, and we can see here back in late July the market was very much similar. From there we can still see that the support level comes in roughly around 68.70 or around 70.80, and at the moment the base comes in for a short-term support at 69.35. All eyes on the US CPI number tonight. The market is a little bit jittery, so therefore we could see, I feel, a slightly weaker number, and that would put a little bit more downside for the US dollar and instead put a little bit more upstep for the Australian dollar, and therefore look towards our topside call, which is around 70.60.65. That would mean the euro could take the next step towards that 102.70.80 level, and if we see a break there, could trigger stops up towards 103 with an objective around 104 figure 30. Any pullback still views support around 101.15. The dollar yen has been mixed for the last 3 days. As you can see, we're into the third day that we're going sideways. Nevertheless, the market's still got a little bit more upstep. I feel we could get a stab at that level around 135, 80, 90 area, and then see a pullback towards 133.85. Sterling, well, the market's posted an inverted hammer twice, and now looking for direction. I feel that we are preparing for a possible move to the top side, which is around 121.65.75. And if we see a break there, could see further scope up towards 122 to 124. Any pullback still regards the support level around 119.5 as a potential demand zone. Finishing up with gold, well, the market still looks towards that 1,800 level, even though there has been some bearish divergence over the last few days. In light of the pattern, we could see another rejection from there. Be on your guard though, because this divergence is a little bit low now, and therefore we could see a snap to the upside if we do clear 1,806, but a rejection from there would see a move back to 1,755. And if we do see a little bit of a weaker dollar into tonight's US CPI number, then that might give some encouragement to an upside challenge before reversing. And finishing up with oil, I still hold the market to a potential climb due to the recent rejection from 86. I'm looking around that 93 to 95 area and then reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.